Hey, what's up, everybody? It's me, Sarah G, with the Smack, and I am back. And today I have a rumble ready to go. Woo! Just want to do a few quick intros. Stephen Lee, a lecturer at California State Polytechnic University. Hey, Stephen.
How's it going?
Dr. Stephen, excuse me. James Giles, a crypto enthusiast. Hey, James.
Hello, hello.
Scott Zaleski, my homeboy, and
Hello, Sarah.
What are you, president or CEO? Which important title do you have?
Something. Financial advisor.
What
What is a president? What even is
Yeah.
You're the president, Scott? My gosh, that sounds important.
Not running for that office yet.
And Robert Wright of Advocacy Wealth.
Hey, y'all.
So, first one we're going to start with, is crypto a scam or what?
Well, I guess I'll jump in here because that's why I'm here. I was in financial services, with Fidelity Investments for over 6 years, but have transitioned into tech primarily in the crypto space. And a lot's happened in the last 12 months, and it's been very exciting for me. I know Scott's probably has a different view on it, but we have the Bitcoin ETF, we have the Ethereum ETFs now. Crypto has become one of the most important drastically impact the presidential campaign with single issue voters in swing states. It actually might be the issue that decides the election.
Wait, hold on. I'm sorry, James. That actually, you froze when you were recording that. Can you just say that part again?
Yeah, gladly. So what I was just saying before I froze, like a lot's happened over the last 12 months. We had the Bitcoin ETF, which was the most successful ETF launch that has ever existed, that's ever happened. Ethereum ETF, and crypto is becoming a very important issue where it's looking like it's going to decide the presidential election with single issue voters in swing states. And very interesting to see that dynamic, so much to the point where for a few weeks Biden even changed his tune on crypto, but kind of reverted back to his old crusty ways. And we have institutions are coming in. I know it's not the greatest measuring stick, but we're seeing BlackRock, Fidelity, people coming into the space. Franklin Templeton is launching tokenized funds. BlackRock launched the BIDL fund, right? We're starting to see real world assets become tokenized, and the only way for that to happen is via and through crypto. I know the target audience of this podcast are financial professionals, and your clients are going to expect you to have an opinion, not just an opinion on crypto, but to be informed about crypto. Like, gone are the days where you don't have to stay in the know-how. We have a massive wealth transfer right now happening. And in my opinion, having a negative view and not understanding crypto is only going to cause, advisors to start losing clients and assets under management. I'm not saying that this isn't a pass for all of crypto. I understand there's reasons to be skeptical. Working in crypto, like as crypto natives, I feel like we've done a good job that can always do better at calling out the good from the bad. We're starting to see the SEC starting to change its tune because the SEC keeps losing lawsuits to the point where lawyers from the SEC have had to dismiss themselves and resign for being caught by the judge lying in some of these cases. You can look at DebtBox versus the SEC. Gary Gensler has had an axe to grind, and he's losing badly. I think crypto's here to stay, and we'll probably dive into the nuances here, but I'm excited. It's been a good 12 months.
Yeah. Well, and to add on some of the things that James talked about, I guess first we have to establish what like cryptocurrency is and what cryptology is, right? It's just the act of encrypting. So the act of encrypting means that you're able to make networks private, right? That's in essence what you're trying to do. And so it's taking that encryption technology that we all like and enjoy. So when we send text messages to one another, right, and we want those text messages to be private, right, we like that. We like the element of privacy, that our conversations have that element of privacy. So now we're taking that same technology and applying it to tokens, right? And so essentially that's all any currency is, right? So if you take a dollar bill out of your wallet, right, all it is a promise to pay from the US government, right? We have what's called fiat currency, which fiat means by decree, right? Our currency is only valuable by decree of the United States government that dictates that it is, right? There's not really any underlying element that decides its value other than the United States says you have to pay your taxes with this currency, and you also have to, in the marketplace, exchange with this currency. So if you have a business in the United States, you have to accept American dollars, right? But in places like Zimbabwe, for example, their currency is basically meaningless, even if it is fiat, right? A $20 trillion Zimbabwe dollar, right? They're everywhere. And it's basically worth about $18 to $20 in the United States. So what cryptocurrency can do in terms of its function is provide the privacy that we all enjoy in other aspects of our life in the context of monetary policy, where right now we're having to deal with what is called fiat currency, which is easily manipulated by those who control the money. So cryptocurrency, in essence, for those who are advocates of cryptocurrency, is a method for freeing monetary policy from the government and putting back into individuals through cryptology, right? So that's probably what I would say is the pitch for why cryptocurrency is valuable.
Does anybody have a response?
All right, Scott, come on, say it. Say the word.
Just a bunch of rocks.
There we go.
Digital rock.
So yeah, it's interesting to hear you guys talk about. It's kind of the same thing that we talked about before in the past. I mean, to me, there's two different sides of it, and Robert, you touched on a little bit in the beginning. You've got sort of the encryption side of it, the technology side of it, and then you've got the token side of it, or currency, or whatever we're calling it these days.
Token currency.
So the technology side of it, I've never been against that. I mean, at the end of the day, technology is technology, and I can see that in all aspects of daily life down the road if we get to that point and technology progresses, and who knows how that will integrate with AI and everything else as we move forward. But the issue I have is taking that technology and then applying it to a completely made up asset. I don't even want to call it an asset, out of thin air that represents nothing at the moment. It's not backed by anything other than someone's ability to pay you a price for something that you have. So yes, it's a negotiated market, much like you're buying and selling a stock or a bond. And if you're using it as a currency, which people are calling it currency, still tokens, currency, whatever, again, you want to label it, it's a spending resource like a fiat dollar or any other fiat currency. Those currencies that are fiat currencies are backed by the government. So they will continue to tax you to 100% if they need to back that. There's nothing backing this type of cryptocurrency out there today. And as we've seen in the past, these things come and go based on who wants to roll out a new token today and who wants to roll out an imaginary thing made out of thin air, rocks, if you will. So at the end of the day, I'm all against how it's being applied in the market, and against the idea that this, we've went through many iterations. It's a store of value, we were told. Okay, now it's a currency, and okay, then you can exchange it just because ETFs are now being created, and some regulation, a minimal amount of regulation is around it, not anywhere near what needs to be going forward. If this was going to be a regular asset of some kind backed by something, and I think it also just continues to be even more complicated with the recent Supreme Court ruling on rulemaking with the SEC and other government agency, and how that's all now going to play out, which we didn't know in prior podcasts and when crypto first hit the scene. So to the extent that can the SEC even make some of the rules regarding some of these things going forward, or other agencies will have some impact as well, and not even talking about the underlying value of well, I don't even want to call them assets. I don't even know what to call them, but I'll call them rocks for lack of anything else. So that's kind of my 2 cents. Nothing's really changed. Technology I support. I think it could be applied in a lot of things. In fact, I was listening to a video the other day, and there's a big proponent and a lot of new technology in the farming sector that, farmers may want to use some of this to, account for transactions between farmers and vendors and land that's being bought and sold sort of, between parties versus, through normal means, and, even through like private equity down the road that might be buying up a lot of farmland in the country. These things can be applied as far as the technology of keeping a ledger and, this stuff, confidential and everything else. So I think there's a lot of everyday uses for it, but just to apply that now to these imaginary tokens and say they have some sort of value just because today somebody's willing to pay you X for it doesn't mean tomorrow they are. At least with a company, there's assets, there's things you can go in and seize, goodwill, there's trademarks, there's all kinds of things that you can have. Whether they have value or not is irrelevant, but there's physically something there, unlike with tokens.
Well,
Well,
I guess,
have a couple rebuttals, but I want to give Steven the floor. Oh, sorry.
yeah,
James.
fair enough. Fair enough.
But I have a
I
couple
think-
rebuttals, but I
yeah.
think maybe James and then me.
I think you still have the fraud problem, which is my big, and I don't remember timeline wise. Last year, did we have the podcast right before all the Bankman-Fried stuff came out? I think it was before, right?
It was before.
When I was talking
yeah.
about fraud, and yeah, and I had raised it in I wrote one of the chapters I wrote with Jeff Camarda in our book that came out late 2021, warning about a whole bunch of other stuff, but one of the chapters was on crypto, and I talked about fraud. And so that goes hand in hand with regulation, but it's really tricky, as Scott mentioned, with the recent Supreme Court decision, basically doing away with Chevron deference, right, as we would call it in the legal field. And so I don't know, there's a lot of questions. I mean, that's the practical problem that I see with crypto is fraud. How do I know that you're not just going to walk away with whatever I fuels? And right now, I think we use fiat currency mainly to fuel the value, at least, of the tokens. But that leads to a larger theoretical issue that I have, which is why is it that it seems to me that tokens necessarily must be pegged to a fiat currency in terms of value. Maybe pegged is the wrong word, but it relies upon, for instance, and maybe James can chime in here, but I have yet to come across instances where tokens are, the value of tokens are in something other than fiat currency, whether it's bushels of corn, other commodities, anything other than fiat currency. And I don't know if that is a way forward. I guess to put it differently, if I don't have any US dollars or British pounds or any other fiat currency, there's not really a way for me to get tokens, right? Unless I produce my own. But I can't get Bitcoin, right? And I don't know. I don't know if that's an inherent limitation. I don't know. It's a big question mark, because that also leads to another theoretical question that I have as far as governance. So because the nature of cryptocurrency, is it going to be sufficient for one government, even ours, to basically say, okay, this is what the regulation is going to be? Does cryptocurrency, does its success necessarily, let me rephrase that, does cryptocurrency's success and becoming common throughout the whole world necessitate like a global government? Because on one hand, I think it does, but on the other hand, I'm not so sure. So that's what I have to say about it.
Go ahead, James.
Yeah. I don't have a simple answer for you, Stephen. And you brought, I'll also try to address some of the things that Scott brought up. Like, I think so part of the thing that makes it hard is cryptocurrencies. Sometimes we get stuck on the name when, I think when Bitcoin first came into the scene, it was thought of, it could be a currency, it could be exchanged for value, and that does happen, but on a very small scale. And really, it's kind of transformed more into a store of value, right? But Ethereum is very different, right? Stable coins have now emerged as a new use case. And so like these things, as a mental framework, I would invite you to look at them more as tech platforms. Tech is ever evolving and changing and improving from things that weren't working in the past. And a lot of the way that a lot of these crypto projects work, is that they are decentralized. They have different groups and they're open source. Now, to the fraud point that you brought up, Stephen, there's been some fraud issues. In the example of FTX, I placed that solely on Gary Gensler because of the attitude that he's taken with crypto. Basically what's happened is he's publicly gone out and said, hey, come in and register. And projects, Coinbase, Kraken, and others, like, okay, let's go and register, Gary. And he goes and tells them, I'm not going to let you do that. And so it's forcing these companies to go overseas, and retail investors then to go on these platforms where they're not under any jurisdiction. And we have FTX, the debacle that was FTX happened. We've had people like Hester Pierce. I mean, we're not in crypto. We're not asking for a free pass. We're asking for regulation. We're asking for rules to play. And the parties that be have said, no, like we're not going to let you. And so it's forcing retail to go to these shady places. And, and there's also, I would also, invite you, like, there are parties and companies that I think are personally more reputable, like your Coinbases and Krakens. And as soon as an issue arises, such as FTX, like they immediately launch proof of reserves, just ways to come and verify. To one of Scott's points, like yes, my argument would be you can't have blockchain without crypto. Like you can't have the distributed ledger without the crypto token. That's why it's there to and we can go into the details of that a little bit later. But and another point that I think you brought up, Stephen, just something that I've heard a lot more is just kind of like what some have referred to as a hard money versus like a spend money, where we are starting to see interest from central banks using Bitcoin again as a store of value, hold it on their balance sheets, but then using traditional fiat currencies for day-to-day spending, and that's what we see in places like El Salvador that have adopted Bitcoin, right? Like having something that's going to hold and maintain its store of value, but then having something else just to be able to spend on a day-to-day basis to but at least you have that Bitcoin or that cryptocurrency to maintain its value. Robbie, but I'll kind of turn the time over to you.
Yeah, so a couple of rebuttals that I have. So on the fraud point, just because we're there, is there something that cryptocurrencies can do fraudulent wise that can't be done with other forms of currency like cash? Like what specifically is cryptocurrencies ability? Because because FTX, that was money laundering, right? And there's lots of methods that money laundering happen outside of cryptocurrencies that we would still find useful, right? So different financial institutions who hide money for different criminal organizations. For a long time, it was insurance, right? So a lot of criminals would buy whole life policies, refund those whole life policies, and essentially launder their money that way. But we're not now saying that insurance is bad, right? So the existence of fraud doesn't necessarily negate the value of the thing, right? Because there can be fraud in a lot of different circumstances and things that are valuable. So I think if you're going to say, oh, well, cryptocurrency is a problem because fraud exists, you would also have to say that, well, we can't have cash because lots of fraud exists with cash, right? So, fraud exists with payment apps like Venmo and PayPal and Cash App, right? There's lots of fraud that occurs, but we wouldn't sit there and say, well, Venmo is bad because fraud exists. Right. So I think that that's kind of a non sequitur when we apply cryptocurrency as bad because fraud exists with cryptocurrency. It doesn't really, fraud can exist in lots of different capacities with things that we do find valuable. Right. So I think right away we have to acknowledge that the existence of fraud doesn't make something less valuable. It just means that people with any tool can use that for evil purposes. Right. The existence of a hammer because someone decided to hit somebody with it does not delete its value, if that makes sense. So in terms of saying the problem with cryptocurrency is fraud, Now, you could say, I guess, to be the devil's advocate, you could say fraud at scale, right? It's easier to scale fraud with digital currencies, right? But to Scott's point as well, I wouldn't call cryptocurrencies an asset as well, right? So the way that I define an asset is income producing, right? So things that produce an income for an investor is how I would define an asset. I think that's pretty textbook, pretty academic. But that doesn't mean that I would say that you cannot invest in things that aren't assets, right? So currencies, tradables, gold, for example. Gold, I don't think is I kind of consider more in the commodity space. But yeah, so just because it's not an asset doesn't necessarily mean that it's not valuable, right? It doesn't produce an income, so maybe it's not going to be the correct investment objective for some clients. However, it is going to be an essential monetary objective for lots of clients who are trying to get out of the fiat currency system. And then Stephen, you talked about pegged value. I think a lot of that is just tradition at this point. I think most people peg it to the dollar because it's easy to conceptualize the dollar versus to conceptualize a Bitcoin. But to your point, like one Bitcoin is still worth one Bitcoin. And if you really think about it, your fiat dollars are so devalued that an abstract alternative currency is worth about 50 to 60,000 of those dollars, right? Like, so if you really like want to take into account how bad the dollar is doing, it's doing really bad against an abstraction, right? Like if we think of Bitcoin as most people think of it as an abstraction, like dollars are really underperforming an abstraction that is Bitcoin, right? Like that should tell us everything that we need to know about the dollar's value, right? And whether it's backed by something. It's really not backed by anything other than the US government's ability to convince us that it still holds value, right? It loses 3% of its value every year. You know, if you do reverse 72 of that, about every 20 years, your dollar is worth half as much as it was before. So, and that's why we're financial advisors, right? Because we know that we need to grow our clients' money to outpace inflation. So this is just perchance another mechanism for accomplishing the same goal that advisors are trying to accomplish, which is to get us out of this poor monetary system. So there's a couple other points too, but I think I'm eating up a lot of time. So
for me, the fraud, going back to the fraud issue, it's not the fact that you can scale fraud massively. It's the fact that there's little to no recourse for defrauding the consumer, the retail investor. That's my concern with it.
Well,
right.
what do you mean little to no recourse?
If I
no,
go
not
to
same with
marketplace
cash.
and I give somebody $20, they don't give me the item, right? I mean, it's gone.
No,
right?
It's not gone. You have recourse.
Cash App,
You can
Venmo,
sue
all those
them.
things, they don't have recourse. Right?
You can hire an attorney to do it. There's consumer protection laws surrounding it. You can go to a government agency and they'll go after the person. There's a lot of things you can do going back to Venmo and Cash App and things like that, right? There are institutional structures in place to not completely eliminate, but to at least give you recourse in the event that you're defrauded. There's no such thing that I know of in the crypto space.
Well, probably the greatest recourse against fraud has actually been the credit card institutions, right? So when people transact with credit cards, the fraud protections that the credit card companies provide are probably greater than any government bureaucracy has ever been able to accomplish. Right. Because essentially what the credit card company says is the value of having you as a customer is worth more than what we lost in the fraudulent transaction. And a lot of times they can't prosecute those crimes. So essentially we just have a large institution that just decided we'll absorb the fraud. We'll absorb the cost of fraud because it's so little to our profit and revenue. Right. So there really isn't a solution. Like there are government institutions. They haven't really solved fraud in any of those capacities though. There's still penny stock fraud. There's still, lots of equity fraud, bond fraud that still exists, but none of those types of fraud diminish the value that those things provide, right? We wouldn't say, oh, because a company listed itself and then pumped its stock and then dumped it, that all stocks therefore are bad. Right. That just does not follow.
But there's recourse against the people that do that, right?
Maybe.
The SEC every week comes out with new litigation releases of institutions that's suing for doing stuff like that. The credit card company isn't going to do anything.
Victims of Enron, right?
But there's nothing that the credit card company is going to do. If I go on a platform and I exchange my money for some cryptocurrency and the person just walks off and I'm defrauded, the credit card companies aren't going to do anything about it though. There's nothing there. There's nothing standing in the way of me being defrauded like there is on credit card transactions, right? If you throw up a website and say, oh, I'm going to sell you a widget, and I buy a widget with my credit card and you defraud me, haha, there's really no widgets. Thanks for the money, loser. And you walk off.
So, but
The credit card company is my recourse, right? As well as other alternatives that are available to me. No such thing on the crypto space.
The major point though is that, and that doesn't exist yet, right? So when credit cards came about, they kind of created and absorbed the fraud situation within transactions.
Yeah.
So that doesn't exist yet with cryptocurrencies.
Yeah,
that's
it
my problem.
Can exist, but also the government. There's lots of items that we deem valuable that have fraud, that also have no recourse, that we would still continue to see valuable
like
despite the fraud. Does that make sense? So my argument is just that the existence of fraud does not devalue cryptocurrency as a technology and an alternative to our current monetary policy.
No, I'm saying the lack of recourse right now, that's my problem with it. As soon as whatever the institution is, as soon as it's there, I don't have a problem with it because I know I can go through XYZ channels to get my money back if I'm defrauded. Then I have no problem. Then largely the other stuff goes away, I think.
So essentially, if there was, whether that would be a government institution or a private institution,
right, correct, or a combination,
help the consumer absolve that fraud, it would be more valuable. Not that its value is reduced by virtue of the fraud, just that it will become more valuable when they solve.
Yeah, I think I think right now putting money or whatever into crypto is problematic for the individual because of the lack of checks, balances, whatever you want to call it, protections.
Yeah.
Against defrauding the consumer. That's my problem. I'm not saying it can't happen.
Yeah.
I'm saying right now, right, that's my main issue with it.
Yeah, I understand your argument better.
And I mean, to your point, Stephen, you know, this is a known thing, and just like the internet, right? There was a lot of fraud on the internet, and that's not to absolve or excuse the crypto space. It's just it's an emerging technology. We are seeing right now layer 2s being, you know, if you are not familiar in crypto, there's usually like you have a layer 1 like Bitcoin, Ethereum, then you have layer 2s are built on top of it for those, you know, who might not be too knowledgeable about the space. But we're seeing layer 2s who are coming in, building to solve that exact issue. You know, coming in, they call themselves KYC for, you know, trying to attract institutions to be able to come in and interact on that. So it is a known issue. Again, it's a very young tech space platform, and you know, as these problems arise, you know, there are founders, there are builders who are coming in to address them.
And I think part of the challenge too is just even listening to you, Jim, James, and Robert describe it. I've heard like 3 different versions of it. It's technology, it's currency, it's store of value. I think this is all very confusing to the general public as well, because when they go to invest in these cryptocurrencies, for lack of a better name, you know, what are they buying? Like, to my point, I don't view them as buying anything right now. Are they buying the technology? Are they investing in the technology? Are they using this as a store of value? If it's a store of value, then I look at it more like, okay, there's an asset here. It's growing, it's storing value. If I'm using it as a currency, then why can't I go get my gas at the corner, you know, gas station and buy goods with this? So it's not a replacement to the fiat currency. At best, it could be a store of value, which I disagree with. More likely, it's a technology that just happens to have some sort of monetary investment that somebody has to make attached to it to be part of this movement, if you will. So when you said it's a technology, think of it as a technology platform. So in people's minds, when they hear that, oh, I should think of this as like a Microsoft, or I should think of this as like a Google. Okay, well, that's fine, but I could go physically invest in Google. They have products that they sell for money, that they derive revenue from, that they could pay dividends to shareholders. So it's all of these things that are very confusing to the public. And the public, I think at large right now, is just looking at this as a trading and a gambling type of vehicle because it hasn't been clearly defined.
Yeah, it's got to have widespread access. That's the other thing I was going to say. But it goes hand in hand with that, right? Like if I'm a farmer in the middle of rural America, how do I, or let's say I'm poor or I'm homeless, how do I get into, like, how do you even, I don't even think the conceptualization is there for crypto. I think it has to have widespread access to the public.
Well, brokers, right? So how does anyone invest in stocks? They invest through brokerage firms, right? Nobody's going down and getting physical certificates anymore. They all go through
Correct.
brokers. So like, organizations like Coinbase and what FTX used to be, right?
Venmo, Cash App,
lots of
credit unions
brokerage
now
services are
it.
offering this ability for the average person to be able to purchase those tokens. So that's largely how most assets are purchased, or through brokerages.
But that's an asset. So you're buying an asset through a brokerage. If I'm buying a store of value, or if I'm buying a currency, I'm not buying my currency through a brokerage for them to turn around and then spit it out the other side, and I got to
even
buy
commodities
something.
like gold, right? You still go through a broker for gold, which I wouldn't necessarily consider asset.
Not really.
or
I mean, you can
commodity.
go buy
Or a pawn
physical
shop.
gold. Gold is a
Yeah.
physical thing. I mean, just
go to
because
a pawn
investment
shop.
products have been created from gold doesn't mean, okay, I'm going to buy gold. I mean, not all gold products that have been created in the investment world are physically backed by gold. Some are and some are not.
Patents aren't a physical thing. Patents are also an abstraction, right? So patents are an abstraction that have value, but it's not an asset per se in that it's income producing. It has the potential to produce income, right? So I guess asset versus differential, or what we call alternative assets. I guess if we put it in, let's call it an alternative asset for the sake of argumentation, right? So you have assets, income producing, traditional stocks, bonds, mutual funds, etc., right? Income producing. Alternative assets, gold, patents, things like that. Those are also abstractions, right? So,
but those have physical value. A patent has a patent on a product or something that somebody can then go derive revenue from. This has no mechanism to derive any revenue from. It's just simply parties that are buying and selling with one another, deriving the value between two parties of nothing that physically underlines the actual thing that they're trading.
Well, cash in and of itself
push back on that
value either. Sorry, go ahead, James.
Oh yeah, I was gonna say, okay, just to address part of that point, Scott, I think, yes, I have made a lot of these different characterizations, and that's just me kind of looking at the space broadly without getting into the specifics of like here Bitcoin versus Ethereum and how they're very different. Like I would say Bitcoin, the way it functions and it works, much more stored value. Ethereum, it does derive, like I can buy Ethereum, I can stake it with which is just locking up, and I can earn a yield from that. That comes from the fees that people are paying to participate in the Ethereum network. Same with Solana and a lot of these other L1 chains, right? So if I'm earning a yield based off of the usage of the network, like it is deriving an income. It is a yield.
The best that I can equate this to in my mind is like this is the same thing that credit card companies are. Visa, MasterCard, American Express, these networks that are being created, the underlying technology. The difference there is that no one is investing in Visa, and they're not producing coins to be able to use their product via a credit card. Basically, you're exchanging, they're taking obviously risk, counterparty risk with that. They're obviously, we just talked about fraud. They're having fraud, products attached to that, so people are not going to be defrauded. So to the extent that they're acting as a network to facilitate transactions, so you can buy goods and services with these products, these coins, for lack of a better name, then yeah, that could make sense down the road. But that's not what's going on here. What's going on here is that might be being built, but these coins and these imaginary products are attached to this technology that's being created in these networks that are being built that really don't need to be there. Visa and MasterCard don't have a coin for me to go use my credit card at the corner gas station.
Well, so the terms here, right? Let me kind of talk about some terms. So when you say imaginary, right, there's a difference between something that's imaginary and something that's abstract, right? So a contract is an abstraction, right? But a contract can have value. Do you agree with that? A contract can have value?
Yeah, contract can have value.
Right. So a contract can have value, but a contract is also an abstraction, right? It's not necessarily a physical thing. It's an agreement.
Yes, it is. It's a physical agreement between two parties. Even though you physically might not hold a sheet of paper, everything's
so
digital
if that
these
contract
days.
was digital,
but it's still an abstraction. It doesn't actually have physical physical elements to it. The only value that it has is by virtue of the enforcement of that. And enforcement is an abstraction, right? So abstractions versus imaginary. Unicorns are imaginary, right? So cryptocurrencies are an abstraction. They're not imaginary. They exist. They're things that you can purchase. They're real, right? There are things that you can purchase and networks that you can participate on, just like a website, right? A website's not real. Like outside of that computer, that website does not exist, but it's not imaginary. It's an abstraction. Does that make sense? So cryptocurrencies aren't imaginary. They're an abstraction, just like lots of other abstractions that we participate with in society. So I think a lot of the terms that you're using kind of conflate what it is and kind of misinterpret what it is, right? A website does have value. So if I have www.scottsolaski.com and I say, hey, Scott, I'll sell you this website. And you say, hey, I'll buy it for $100 and I sell it to you for $100. Did we actually exchange anything? We absolutely did, right? Because there's a abstract realm that exists in the virtual world where that address has value, right? So there's lots of abstractions that we can invest in that aren't imaginary, like unicorns and, you know, aliens and stuff like that, right?
I think,
but I'd also go back. Oh, sorry, you go, Stephen.
Just really quick, I think the more interesting question is, let's say that somehow Scott winds up with some cryptocurrency and Scott gives you the cryptocurrency in exchange for that domain. Was there anything actually exchanged?
Yeah.
It's a taxable event. Ask the IRS.
well, but above that, like excluding the government and everything else, right? So back when the Native Americans used to trade with the Europeans, right? It was very difficult to trade, you know, different types, right? Which is why we have medium of exchanges, right? Because if I have a car and you have an apple, how do we determine the difference in that value, right? So they used to trade with beads, and they used to trade with like little coins or little shells that used to come up on the shore. And that was actually hard money, right? It was very difficult to acquire those shells. And then it was only when the Europeans started falsifying those shells by using glass and smelting glass that they flooded that market and made that currency soft and useless, right? So gold, if we had that same transaction and you gave me a piece of gold, we used a medium of exchange to represent the value of that transaction, right? And cryptocurrencies have the capacity to do that, or they have the capacity to facilitate other forms of medium of exchange, like gold does now, right? So gold, the major problem with it as a medium of exchange between individual transactions is its weight, right? So while it can maintain its store of value across time, it has it difficult with its transaction value across space, right? Because of its weight. And the more, you know, the larger something valuable is, the harder it is to transact in gold across that space, right? So cryptocurrency essentially solves that space issue that gold has. So you get the privacy of a cash transaction with the value of a gold transaction, which is that is going to maintain its value across time, right? Because that was the largest problem with gold as a medium of exchange, is that, yeah, it kept its store value across time, but it was very difficult to transact with as you got into higher and higher weights. With Bitcoin, you're essentially doing the same thing, but now that you're using technology to solve the space problem, right? So, but medium of exchanges, regardless of whether they were gold, silver, tokens, coins, medium of exchange provides value in that we can interpret value, and the interpretation of value is valuable in and of itself.
Yeah. And again, just to Scott's point, like, I feel like we just keep getting hung up. Like, I'm going to just use Ethereum as a very specific example. Without the ETH token, there is no Ethereum network that allows for the distributed ledger, instant transactions to happen. You know, and on the Ethereum ledger, for example, a lot of transactions using stablecoins, using digital representations of US dollars that are backed by treasuries take place. And we are seeing people choose to use stablecoins on Ethereum or Solana, you know, these other L1s to transact, because it's a whole hell of a lot cheaper than using traditional payment rails. And it's a whole lot quicker. Instead of T+2, you're gonna have to wait about 10 minutes.
So I'm wondering, based on Scott's point, I'm wondering if, let's say that there's an institution, and maybe it's the credit card companies that ultimately do this, if this is even going to happen, What happens if Visa or MasterCard says, you know what, we're going to have this large stockpile of Bitcoin or whatever cryptocurrency. And so when you sign up to our platform and you place money into this crypto vehicle, we're going to mail you this circular little thing that's going to have the Bitcoin logo on it. And it's either going to be RFID or magnetic or whatever, like strip on it or whatever, right? And you can take that little thing with you. It's almost like a credit card, but with a bearer bonds. And that's kind of, in a very primitive way, that's how I think about crypto somewhat. I know that it's encrypted and it has like the ledger and everything else, but from a practical standpoint, at least once we get to the point where I can take that little coin and I can go into anywhere and I can just hold it up to whatever the reader is and I can purchase goods with it. Right. I'm wondering if things gravitate towards that, then Scott, do your problems conceptually with this go away?
To some degree, I mean, but the problem with it still is that at the end of the day, I'm sitting here in my mind thinking, could any of this even exist if there wasn't fiat currency? So everything always comes back to the fiat currency.
Well, gold existed as a medium of exchange before fiat currency.
That's true. But again, it's still valuable. It's still a physical asset today that people value.
Well, again, people only value it in the context of fiat currency, right?
Right.
Like people aren't exchanging with gold, but people value it in context.
Well, yeah, I agree. I mean, it was even more so when we ran the gold standard. Obviously, it was pegged to it. So, I mean, it needed the fiat currency at that point, or the other way around.
Gold
probably
existed as a medium of exchange long before fiat currencies. Fiat currencies is because the government wanted control of the monetary devices that were used for exchange. Because if you control the monetary devices used for exchange, you control everyone.
And that brings up an even larger problem. I mean, the United States and, big developed countries, are they going to give up that control over time to, again, some centralized version of a currency? Almost probably no. I mean, there's going to be emerging countries that this would be appealing to that either don't have a reliable currency or, their currency is not valuable, or there's issues with fraud that are beyond what we're even conceptualizing today, where that might make sense. But just today, where everything is pegged to, some sort of currency, mostly US dollars, at the end of the day, I'll just go spend dollars. I mean, and then it's like, what does this exist for? This exists then again, back to my point of somebody's putting this in there, not because they want to store their dollars, because they can store their dollars a lot of different places, money market funds, investments, stocks, bonds, you name it. But if they're just storing dollars, this is just going up and down. This is not storing anything. This is just like, this has volatility like any other investable asset, but this isn't an asset at this point. It's just something that, to your point, Robert, is arbitrary, that happens to be tied to the fiat currency, mostly the US dollar, that people are being able to peg that to be able to trade with one another. But what are they trading right now? That's the unknown. So
I guess in the function of money, right? So talking about the function of money, one, you're right in that third worlds and emerging countries are using cryptocurrencies because they're a lot more cheaper than traditional the financial sectors, especially for remittances, right? So if I'm doing work in the United States and I have a family in Mexico, or if I have a family in Zimbabwe, or if I have family somewhere else, going through the traditional financial markets is burdensome, right? Even Western Union and all those organizations, it's really costly and burdensome to be able to support my family that lives in another country, right? Bitcoin, Ethereum, easy. I make my paycheck, I buy my Ethereum, I transfer my Ethereum across their network. They can go cash their Ethereum for local currency, done, right? That's huge, right? I think there was something to say that like over $300 million just within the last year was done in remittances. I'm sort of making that up, but it was a large amount. I don't know the exact number, but that's huge. That's an exorbitant amount of value. And that's real value that real families feel, and some of the most humble families that exist on our planet can feel, right? Those effects can't go unnoticed, right? So
yeah, but that's different though. I mean, like if we took the US dollar out of this and you said, okay, let's peg this to, a emerging country's currency that's not really stable at all, do you think that this would be what it is today? Absolutely not. I mean, it has to have a fiat currency that's backed by a stable government or stable country or both for this to even be in existence today, to be whatever, again, you want to call it, not an asset, but an arbitrary idea.
Yeah, I
You wanna
disagree
put it
that it
out there.
needs fiat currency.
Yeah.
What's that?
I disagree that it needs fiat currency for two reasons, right? Gold existed before fiat currency, right?
Right.
So
Well,
gold
we're
was
not
used as a
moving
medium of-
backwards.
Well, but that's not what I'm saying. But gold, not moving backwards, just starting at a different point. So gold was used as a medium of exchange between individuals before governments came in and controlled it, right? So that was a technology. Gold as a medium of exchange to be able to express value between individuals across time and space, that's real valuable. That's valuable. That is technology, right? Just like armor and sailboats were also technology, right? So Bitcoin is the gold of our era, because right now what we have is we have large government institutions that control our monetary policy completely. And Bitcoin is us saying we no longer want to participate in that.
Yeah,
You don't
and
trust
all that, and
to-
all that's
Opposite of
nice and it sounds all great, but the reality is no large developed country like the United States, Europe, or others are going to say, "Oh yeah, we're going to give up that monetary control. Let Bitcoin and other coins, if you will, become the global currency that we all trade in." No, this is, I think, yes, a lot of money's going into this. And yes, it's in its infancy, and we'll see how all this plays out. But no country is going to do that. If that was the case, the U.S. government would issue, basically a
We
cryptocurrency
have large
coin, and they might.
historical
Who knows?
examples of
But
this happening, right? So when the Europeans first came to the United States, they didn't transact in European monetary gold and silver tokens. They transacted with what the Native Americans perceived as valuable, which were shells and beads and things like that. And
right,
that's
but you
how they
have to
created
take
So
a
there's
long
tons of
period of
historical
time.
examples in which there's a different technology or an alternative technology that shifts what's being used as a medium of exchange in society.
None of us are going to be alive when everybody is shifted to crypto to pay and have value, basically.
That's an assertion.
for-
That's an assertion. You have no clue whether that's true or not. That's just an assertion.
The only assertion I have based on that is the fact that when the governments are going to give up control of their monetary policy is when there's a possibility for something like that to exist.
But
with
they
crypto.
don't have to give up control. Just like the Spaniards didn't give up control of their
Yeah,
of their
I
currency
understand what
when
you're
they
saying,
traded
Robert.
with
I
the Native
disagree with it, but
Americans.
Well,
No, I'm just saying
I
there's
mean,
lots of historical examples that you're saying that it's not going to happen, but there's historical examples in which medium of exchanges throughout history had to.
but that's different than central monetary control. Just because there was other mechanisms in the past to exchange value, that does not mean at that time there was a central government control using a fiat currency and a monetary system where they had control of that system. So no government is
Are
going to
you saying
easily
that
allow
the
that.
Spaniards in the 1600 didn't have fiat currency?
Yeah, but it's different than it is today. I mean, everything, again, we're moving a little off of
That's the
that, but
difference.
what's that?
Scale, that's the difference.
Well, you also
fiat
had
currency
presence of.
existed, it had to shift to accommodate a different type of society. So
It's also fundamentally
Bitcoin could
different
absolutely
society,
do that.
though.
What's that? Sorry.
Fundamentally different society, though. Like back then, you still had nations that were warring with each other. Like the developed nations were constantly at war, and they were still fighting over like sea supremacy and like all sorts of stuff that's largely been settled now, right? Like we're not bombing England and all this other stuff isn't going on. We are progressed to a more civilized society, and I know that's anachronistic to say that, but the society that we have now is very different than it was in the 1600s. You don't have like warring, well, you do in the developing nations, but right,
Sure.
it's so different than it is now.
Yes.
I think Scott's
Society
point is you can
different.
go back in history and say, bam, right
But that's
here.
just another assertion. You're just saying, oh, by virtue of
US
society
government.
being different, it was also different back then, right? So the year 1000 was also dramatically different than the year 1600, and the 1600 dramatically different than 1800. Different technologies emerged and different mediums of exchange emerged. If you really think about it, the US dollar didn't exist till 1776, right? Or even broadly after that, till they had to figure something out. And even then, it wasn't really adopted until quite some time. So our dollar is still relatively very new, right? In historical context. So
right, but the power behind it is unlike anything the world has ever seen, I think is Scott's point.
I won't disagree with that, but I will disagree that just like the British Empire also in its time was the greatest power that ever existed. It is now
right.
is not. Right. So empires can fall, right?
Sure.
They can climb and fall. So if empires can climb and fall, their currencies climbed and fell, right? The US currency is not some sort of mystical currency that can never fail, right? It can also be subject to all the things that have ever happened throughout history with empires, right? So the American empire currency can also fail, right? So Bitcoin can be an alternative currency, just like gold is an alternative, just like seashells were an alternative, just like other forms of medium exchanges throughout historical society have changed and adopted, right? So we're just in Bitcoin's infancy. It's basically only a decade old, right? So the idea that, and its adoption
trying to push that
years
rock
really
over
high.
but trying to push that boulder up the hill, though, I think is way harder now than it was to disrupt than it was back then.
I think
just because the enforcement is crazy powerful, right? Our country is ridiculously powerful compared to any empire in the past. Like it's beyond comparison. And so I think that's
if another country tries to adopt Bitcoin in any form or fashion, like what, the US is just going to bomb them?
Well, there's a whole bunch of stuff. Like the US can just lean on any country, right? Can sanction them, it can do all sorts of stuff.
Sure.
To just and the power that our government has, I think, is beyond anything that the world has ever seen.
Well, what I think, I mean, again, we're talking now specifically about Bitcoin. I think we're, globally, we are starting to see people become more attracted to Bitcoin again because it's decentralized nature. No one country controls it. Yeah. And the global, I'm trying to think.
But countries can ban it.
Are losing faith in the US. Like look.
Sort of.
Yeah.
You can sort of ban Bitcoin.
Who's buying our debt now?
You can ban
China used to buy 22% of our debt, and they're down now to 6%. Like nobody.
Yeah, they started.
It is unsustainable.
Yeah, I'm not arguing that. I'm just saying that I don't think it's a linear scale. I think the effort required to disrupt is exponential. I'm not saying that Bitcoin or crypto won't do it. I'm just saying that I think the effort that needs to be put into it is way more than the effort
I think
that
you're
needed to be
arguing
put
a
into
won't
it.
versus a can't. So
Correct.
I would argue against
That's
a
right.
can't. You're just saying a won't. That's fine.
Right. Or at least right now, probably
that's just a difference of opinion. But as far as a can't, I highly disagree. I think it has vast potential to do so. Now, will it?
Right. That's what I'm saying.
Yeah.
But I think that's a good characterization. Mostly I'm in the won't or currently won't camp.
Right.
Not the can'ts camp.
Scott's in the can'ts camp. I'm a little bit more white-pilled. I'm in the can and will. I think that Bitcoin will dramatically revolutionize the way that we do money in the future, especially in 100 years.
And I do hope that happens, right? I've been pretty outspoken, and I hopefully will be at someday when I write a book on it, against the whole idea of central banking. It had its place, but
hey man,
it's 35 people in a room.
Happy to endorse.
Like there's 35 people that decide what we can charge.
I agree with you on that, Stephen, and they're never right about anything. So.
It's crazy. It's 35 people that were just appointed that have economics degrees. They're more powerful, arguably, than our senators are.
Yeah.
It's crazy.
Endorse that book.
It's just 35 people that decide, oh, okay, are we going to raise rates, lower rates? What are we going to do? And then everyone has to abide by it. It's crazy. It's absolute lunacy. And
they're too late and they're too early and they get it wrong all the time. And it's just,
I really hope that crypto does disrupt that process and that the central bank largely goes away. But there's a lot of obstacles to it. That's my, I guess, my sum up.
Yep. Fair.
Yeah, fair. I'm not going to disagree with you at all, Stephen. I am an optimist. And that obviously heavily influences my bias, and I see those issues, but I'm seeing a lot of just wonderful, very talented founders starting to tackle a lot of these issues.
Sure.
I'm not going to defend all of crypto. Like I would say like 90, 95, maybe 98% of like all the projects tokens out there are complete garbage. Like I really struggle with like the meme coins and like the Caitlyn Jenner coins and all that stuff. Cause again, like there is no value there. Like it is completely pointless. I think a lot of people, who are trying to delve into a lot of these fringe projects, a lot of them, many people do know what they're getting involved in, but I think in coordination with the SEC, these governing bodies, disclosures, things like the space can be made a lot better, but I don't blame people who are speculating on things. I'm not saying it's right, but I also don't blame them because, like, let's be honest, our public markets are dying. Like the number of available publicly traded companies is declining
It's
almost
NVIDIA.
every year, right? And also just the fact of like when a company goes, IPOs, it's retail buying in, and it's like, they're kind of getting the shaft because all of the return institutional investors and accredited investors that I and other retail investors can't participate in and can't and can't take advantage of that. Accredited investors are basically dumping on retail, and yes, like there are returns to be made there, but just with the lack of access to investment options, I mean, if you're not in crypto, for those who aren't involved in the crypto space, I mean, 0-day options, day trading, forex, like people are out there knowing that they're getting the shaft here.
All right, guys, I think we're going to wrap it up here. We've been at it about an hour.
Ooh,
Sorry, that was longer than 20 minutes.
I'll stick with rocks.
Just a reminder that nothing in this podcast can be interpreted as a product, insurance, or investment recommendation of any sort. Nothing in this podcast can be interpreted as legal or compliance advice. For any recommendations specific to your or your client's personal situations, please consult a consultant, advisor, or attorney.